Hey, let's see here. Let's see. Can you guys hear me? I think you can. Hey, coming at you, what is it? Just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 14th of March, 2023, right? So I'm coming at you live from just north of Houston, Texas. I'm Christopher Inks with Texas West Capital. Hopefully you guys are doing all right here. Let me see who all is here already. I see Mark's here. Bamboos, what's going on, guys? You guys can hear me all right? Oh, great. So yeah, I'm using the newer, the additional streaming software here, trying to get used to it because the hope is to get more people on the show. You guys seem to really enjoy when we have Fibbo on here every other Friday. So we'll see if we maybe get some more people on the show and see if I can't become more of a host than just information source, I guess, right? Yeah, people forget daylight savings times. I've done what I can, to kind of remind people that we did have that daylight savings time hit us Sunday. I lost an hour. At this point in time, guys, it's ridiculous that we keep on with that. What do you call that? That God, that whatever it's called, daylight savings time. See, I can't even think this morning, guys. It's been a heck of a day already. Arrow Quinn, what's going on, man? You said you'd love to see trade thoughts with other traders on TWC. Looking forward to that. You mean bringing you guys, members of TWC, up and talking about? Oh, that would be something interesting. Y'all seem to like to hide behind, you like to hide your faces, though. So I don't know if anybody really be into that. But maybe we will. Maybe we'll do something like that. That might be kind of cool, right? Angry Patrick, what's up, man? Hank's here. Dennis Hurley, what's going on, buddy? Bamboo, of course, Mark. Good to see you guys. But yeah, maybe that's something we could do. But definitely looking at potentially moving into bringing more people on. So anyway, we've had a lot of stuff going on here, right? It has been a heck of a week, right? From last week into this week, we had Jerome Powell comes out at the beginning of the week. And everybody took it as really hawkish. I took it as more of a, hey, I'm keeping my options open. But basically testifying there in front of the Senate and says, well, listen, it looks like we may end up having a higher terminal rate than what we were looking at. I don't know that means we'll increase our rate hikes, but maybe we'll have consistently, smaller rate hikes as we get toward there. But, it just depends on the totality of the data is the terms that he used there, right? And so he goes off on that, and then Friday comes around, and oh my gosh, hello Friday, right? So Silicon Valley Bank goes down, Signature Bank's down as well, right? And then, all this stuff happens, right? So we got three banks that go down. Then the weekend hits, and everybody's freaking out, right? It was, oh my God, USDC has, a percentage of whatever over there at SVB, Silicon Valley Bank. And everybody freaks out, right? And so that thing pops off down to below 90. I think Hank took actually a long trade on that, coming back up on that pop. But, again, this is what I tell you guys. The thing about trading is that most people come in and they have no clue about what they're doing. You guys think trading is this thing, many times you come in and you think trading is just this thing that you do, right? But it's not divorced from everything that's going on in the world, right? And so you can learn to trade off charts. If you learn to trade off charts, then there's very little fear involved because you have an understanding of how and why price is moving like it does, what it may be going, even if you're wrong, where's your validation, where's your invalidation level, all that great stuff. But most traders coming in don't understand that, guys, which is why most traders are out within the first, 90 days, 95%, something like that. It's crazy. And they've lost everything that they brought in. And a lot of times even more, they put in more in that 3 months, right? And people think just because they can do it that they, instantly know how. I see other stupid people online, and I'm going to use the word stupid because I don't feel like being nice this morning, because they get out there like, oh, well, don't trust anybody that has some kind of thing saying they're going to teach you how to trade. If they could trade, they wouldn't be doing that. Well, that's about the dumbest take I've ever heard. Everything else aside that I've said before, how do you think people learn to trade in the first place? Somebody has to teach them. Oh my God, it's so dumb, right? But yet, young people or young traders, right? New traders come in and they say, oh yeah, that's true. Shouldn't do that. I mean, seriously? This is about the dumbest take on the planet, right? And a lot of times it's a take taken by those large influencers, right? But they say that because all they do is market, right? That's what they do. They don't really trade. They just kind of market. And so, they get you to fall in with their nonsense. So you'll follow them, instead of somebody else. And so it's just kind of crazy how it works out. But I think you guys, many of y'all, been here quite a while with me. So I think you're beyond that. You don't have to worry about that nonsense. But if you are kind of new to it and you hear that kind of stuff, it's about the dumbest thing ever. What do you think people do when they go to trade for a bank, for a large bank like Goldman Sachs or something? You think, what you think they just hire them up and say, hey, okay, go ahead? No, they put them through a program. They got people on payroll that trade them, that train them to trade the way they want you to trade. So I mean, this idea that people, that are teaching is just the dumbest thing in the world, guys. So yeah, the best way to learn is teach. Exactly, Hank. The good thing about those of us who do actually teach is that we constantly are reminded of things that we may forget as we're trading. And that's the way with anything in life, guys. The more you don't, if you can sit there and try and teach somebody, it gets easier, right? Because you learn to teach it better. The longer you do it, the better you learn to teach it, right? Who was it? Was it Einstein that famously said, if you can't explain something to a 5-year-old, then you really don't understand it? Well, how do you think you get to that level? You have to continue to clarify your pitch, right? To dig deeper into what you're trying to explain and break it down into different chunks that start making more and more sense, right? With less words. It's a difficult thing, guys. It's not easy. It's not easy. So anyway, yeah. I just happened to see a few of that thing on there. God, man, I saw so much just childishness on crypto Twitter last night. I couldn't take it. You got large accounts with hundreds of thousands of followers fighting with each other as if they were in high school or middle school even. It's absolutely embarrassing. I can't even see why people do that. It's just, I don't know. Maybe I'm just old, guys. Hey there, Kimasabi. Good to see you. Hobby Dons. What's up? Chris Baker. Good to see you guys. But yeah, like Hank's saying there, everything that's really kind of happening is in the charts, right? And he's using my line there. Either I come from the future or I have connection to the Fed or news doesn't, rule the chart. You decide. Yeah. I used to always say, I'm not from the future. So since I'm not from the future, the news must actually be in the charts. Right. And so Hank's not wrong there. Again, guys, now what that means, there's a lot of things that we say as traders that most people don't, they don't let me just kind of give you a little bit better picture here. Let me talk to you guys. So there's a lot of things that we say as traders that new traders come in and they really don't understand, right? We say things like, okay, well, you need to buy when there's blood in the streets. Well, what does that mean? Oh, well, everybody's bearish, so that means there's a good chance the market's going to reverse. Well, what does that mean, right? Because then everybody goes and looks at their social media feed and they go, oh my gosh, everybody's bearish. Well, no, that's just your curated feed, right? That may not be everybody or really what it means. And there's actually, it actually means a bit more than what people kind of give lip service to, right? Because when you're new, that's what they say, right? And it seems like, okay, well, simple as that, but it's not really that simple. It's a little bit more nuanced than that, right? So, you guys have to keep this in mind, okay? So as you progress in your trading education, your trading life, right, you're going to see different things like this come up. Or like we say here with the news is in the charts, right? And you'll think, well, what the heck does that mean? What, you knew the banks were going to fail? No. But we knew we were getting to a point in the charts where things looked like they were going to pull back, right? And that's what happened. The news event is secondary. Something would have come along at that time. If it wasn't the bank thing, it would have been something else that you would have associated with what was going on. This is something we talk about all the time, right? Is this idea of our association, right? So price action and news, this is a big part of, if you look at the socioeconomic theory of finance, that idea, right? A big part of that is that price action and news happen all the time, but we only tend to associate it to mean something when we want it to mean something. Other times we just ignore it. And so historically, you'll see the same basic type of news event happening. And one time it'll happen and price will go one way and your pundits will be out there saying, oh, it's because of this, this, and this. And then the same event happens again. And then it goes the other way. And they're like, oh, but this time it's because of this, this, and this, right? But it's the same event. Historically, this happens all the time, guys. And that's why we always say, don't trade the news. Learn to read the charts because then you can be in before the news happens. Now, does that mean you're always going to get it right? Heck no. What do you guys, we're human beings, which means by design, we are inherently fallible, right? We can't possibly make all the correct decisions all the time. That's why risk management is so important. There you go. Okay. So are there any real traders out there on YouTube or social media? I don't follow much on the platforms, but on YouTube, can easily count on one hand the amount of actual traders. There's a few of us out there. There's a few of us. But you guys have to understand there's a difference. I know a lot of you guys have grown up in social media. See, I'm old enough, Hank's old enough that we knew life before social media. But those of you who have grown up on it, you're kind of grown into this whole influencer thing, right? But influencers are just marketers, guys. At the end of the day, not so few of them actually have real experience in what they're talking about, and then that's becomes the problem, right? Because you go in there and you're like, oh well, they got these followers and do all this, so hey, I need to follow them, right? And then you get kind of pulled along in there, and then you find out some of them are, getting paid to advertise certain things or getting paid to review products. Now, I don't think that's a terrible thing, guys. I don't think it's a terrible thing for somebody to come and say, okay, listen, we're going to pay you to review this. But I think you need to, kind of say, well, listen, we were paid to review this. And I don't think you can actually, that you can say, like they say, okay, well, here, we're paying you and we want you to lean it this way. That happens. And by the way, guys, that doesn't just happen on social media. It happens everywhere in the world. Everything you're doing, everybody's advertising or marketing to you in some way. So you just have to recognize that, okay? But me personally, every week I turn down offers to get paid to review some kind of product or something. A few times they'll even ask me directly on Twitter, and you'll see, you can go look at my feed, and I'll be like, I don't do that. I don't review products because it's not. I'm not here to do that, right? I'm not here to convince you that some product is going to be some great thing. My opinion today, guys, is the same opinion. If you've been following me for a few years now, it's the same opinion I've held for the last few years, which is that cryptocurrency is still just a speculation market. That's all it is. I do not believe there's anything in there that's life-changing for anybody at this time. I think the idea of blockchain or whatever is going to produce products at some point that could be, very beneficial to us. But I don't, somebody comes there and says, oh, this project, I don't even know what the projects are out there, guys. Oh, this project is doing this and this. They're going to change everything. My God, guys, if you've been in here since 2017, you saw it with the ICOs, you saw everything. Oh, Ethereum killer this, platform killer that, the newest platform this, Bitcoin killer that. It's just silly. If you're in this space, don't get caught up in the nonsense, guys. Understand that every one of these projects could go to zero overnight. This is an extremely risky market to be in. You guys have to recognize that. If you don't honestly recognize that, there's nothing I or anybody else can do to help you. You have to understand the market that you're in, okay? Now, like I said, that doesn't mean it can't become something at some point in the future or some way. But right now, I'm a firm believer that you should treat this market as just a speculation market. Purely, nothing else. Don't give me no fundamentals about some team nonsense BS. It happens all the time. Rug pulls all the time, guys. Oh my God, this great dev and everything, and he pulled the rug. Well, of course he did. Of course he did, right? Does this make sense, guys? Does this make sense? Please, God, please tell me it does, because I think that's one of the biggest things that you have to recognize if you're going to be in crypto right now, is this reality that this is the market is what it is. Okay. So, and there's a lot of narrative behind that, because everybody's like, oh, legacy financial system this and legacy financial system that, guys, I've been talking about it for years, right? Everybody's been romanticizing the death of the dollar since, probably 60s, 70s, right? It hasn't happened yet. It's not going to happen tomorrow. Okay. Bitcoin is not going to be accepted as global reserve currency because nobody can control it. The big country, the powers that be are not going to allow, are not going to accept, right? It's not that they have to allow or disallow, right? Your country decides what's considered acceptable currency, right? What's recognized as currency. So they can just not recognize it. You guys always think, oh, they have to do this. They don't have to do a dang thing. They just have to not recognize it as such, right? So there's a lot of things going on in there that, and that relates to what happened on Friday with the banking. Okay, so we're going to talk about that. Bitcoin's kind of rallied up, we're right around that weekly pivot. That's that sweet spot potentially breaking out here. So we'll see what's going on there. A few banks are really rallying back up after Monday, after they dropped on Monday. Huge rallies up. Some people have made like an absolute killing. What else we got on? We got other stuff coming. We've got CPI came out today. We'll talk about that. We've got the Fed meeting here in about 8 days, the 22nd of March. We'll talk about that. So much more going on there. Who else here already, though? Everybody else jumping in? I see Diego. What's up, man? Blockchain Gains is here. Glad to see you checking in, man. Let me see here. Who else we got? Andrew Benning says, I remembered when there was no internet. Yeah, that was quite a while ago, right? First time I was in college, there really wasn't. There was internet, obviously, right? But it wasn't like what it is now, right? There wasn't the internet that we all know is the internet, right? Let me see here. Nevlusian, what's going on, man? Last day before going to Tokyo for a few weeks. Man, that's awesome. That's open. Have a great time, man. I used to live in Japan for a few years. Really a lot of fun. It's so different over there. Lots of beauty. Lots of crazy things going on. Some weird stuff too. But I think every culture kind of has its it's things that are not mainstream, so I would never knock somebody for it. Everybody's got their own thing that they enjoy and let them enjoy it. If it's not hurting you guys, stop worrying about it, right? Deadly123 says a lot of the rhetoric has been the same stuff over and over for years and years. Yes, it has. Every altcoin, same features, then reintroduced year after year, pure speculation. Yep, same thing. But you always have new people coming in, and they weren't here at that time. Hopefully those that were around at that time recognize what's going on, and then they're like, no, but it's easy to get caught up, guys. We're human beings. Emotions are what we are. Which makes trading, a lot more difficult, especially at first. By the way, guys, just so you know, emotions never go away as a trader. They just get easier to deal with. They don't ever get easy, but they get easier to deal with. You're still going to find that moment where you're like, oh my God, and you get really emotional, but it is what it is, right? Hank says it's funny how the entire crypto world is gloating because 2 banks have a controlled failure over after the year of the crypto sphere has had. Yeah, I know, right? And that's really kind of sad too, guys. Listen, I keep telling you, you don't want what you say would be so cool. This collapse of the financial system, guys. If it collapses, the world basically collapses. And you are not going to like that. I tell you, you can talk all smack all you want. Oh, I'm this great hunter gatherer or whatever. Guys, we are soft. We enjoy our air conditioning and our easy lives, and we complain about bills and the interest rate, but you know what? Life is easy right now comparatively to what it will be if anything were like that were to happen. That's the reality, guys. That's the no fluff reality. That's the stuff that most people don't talk about online when you get kind of all, hooked up in it and whatnot, with all this, oh my God, this would be so great if it went down, then Bitcoin was in control. And if the world's financial system goes down, guys, there's spark to war for a lot of places. Okay. And we don't want that. Got enough of that nonsense going on with Russia and Ukraine right now. Thoughts on the capital gain tax increase? Yeah, I'm going to talk about that in a minute as well. You talking about Biden's $1 million plus level? Yeah. Let me see here. Yeah, FRC was one of those banks that's rallied. I think it was FRC, right? Yeah, I think. And then WAL, WAL, had WAL. I think it was up like something like 200 somewhat % in the day from the low. It was crazy. Well, Zobia, what's up, man? Good to see you. Fibbo checking in. What's up, man? Ahmet, he says, looks like we are getting the third wave free money. Yeah, I think there's a possibility for that. As the title of this episode said, the Fed has effectively pivoted, I believe, and I'll talk about that here as well in a minute. Let me see here. Michael Johnson, what's up, man? He says, for emotions, I'm having a tough time not having FOMO when I already have a position. It's tough, man. It's tough. But it is something that over time, right? Over time dealing with it, It's like anything else. You know, when you practice a habit consistently and correctly for a while, right? Or practice that, it becomes a habit. It doesn't ever mean that you'll never have to worry about it again or that it doesn't become tough at times, but it is something that you have to work toward. Pixafin, what's going on, man? Been a while since I've seen you check in. Let me see. Bimbo Swanee says, if the financial system goes down, come join him at his Bitcoin citadel. He believes that we've got a forced pivot, just as we always say, they follow market, not the other way around. Exactly. Let me see here. Okay. So if you'd like to join us here, I did it. I finally jumped out and did it. I've been kind of teasing this for a few weeks. We're going to go ahead and do tier 3. I don't have any specific time limit on this. It won't be long because we just had that special a few months back. But you can get tier 3 for a month, $49, guys. Normally $200. Jump on it while you can. It may be gone in a couple of days, maybe gone in a week. But I'm not letting it stay up, again, an extended period of time. So go ahead and jump on that. You can do that at howtotradetowin.com, right? Just go to the join us button at the top and it'll get there. Also, you can join us at howtotradetowin.com/LMT. As the scroll across the bottom, it says that's our mentor program. Man, oh man, guys, if you aren't in that, you're missing out. Really, getting in there talking about these things we're talking about, right? Emotions. How do you deal with them? What do you have to be aware of? What things are holding you back as a trader, and how do you effectively deal with it, right? We're going to go as our year continues, we're going to go into market structure, the finite areas of market structure, understanding that. Right now, we've done a lot of teaching about trends and how to identify trends and how to use trends with the system that I have. And it's just so much more. So anyway, we'd love to have you there on that, okay? Bamboo says, look at Japan and how it works the last 30 years. Hank thinks the 1930s will never happen again. Man, I can hope, right? But right now, I still believe that things are probably headed up more likely than not, right? Let me see here. So what do we got going on here? Let's go ahead and pull up a chart here real quick. So I'll pull up this one first, right? So this is the Bitcoin CME futures, right? And as you can see, we've got this nice rally up into the pivot, right? Now, again, from day one, since we've been down, at the bottom here, I've been talking about the idea that, listen, either we're going to have a rally up to the pivot, pull back, and then break out, or we're going to crash on through the pivot, up through the R1, pull back to the pivot, and continue up, right? And so what we had was a rally up to the pivot, a pullback, and now we're wanting to rally up here. So this is the weekly chart. You can see that we're about to cross, we're threatening to cross bullishly here as we've just dropped out of overbought. So there's a lot of room on Stochh RSI, a lot of room on RSI for us to continue up. That's a heck of a weekly candle, guy, right? That's a heck of a candle right there. And so the idea is basically that we got like a 1, 2, 3, 4, 5 gives us an A, a B, working on C, right? Now, if we look at that, we go, okay, well, does that make sense? Sure it does. Look at this. If we do the pullback here, we pull back just beyond 50%, right? For those of you worried about the gap, there it is. It's filled, right? So there, now you can't yell about that. Now there is a smaller daily gap right here now. But again, we'll see, what goes on with all that. We've got gaps, as you can see here, right? We've got gaps up here at 27,355. We got another gap up here at 34,455, right? At least. This one's got some wicks into it, but still generally considered a gap more or less there. I mean, you can kind of maybe figure it's filled. But if you're looking at it, it's still up there around, what is that, 51,040 or so on the CME here, right? So, I mean, if you're worried about this little gap right in this area down around whatever it was, 20,000 or so, and you're not thinking about these gaps, I mean, then you're just being an emotional trader, right? Right? So we've got this going now. Andrew says Bitcoin daily is looking like a megaphone. You mean like this, like A, B, C, that would be D. Well, then you'd have to have an E down lower here. I mean, it's possible, but that, again, when we're looking at charts, we want to look at things that are more likely to happen, not things that are kind of like exceptions, right? And that specific pattern, that inverted symmetrical triangle or megaphone pattern, because again, you get higher highs and lower lows, and it looks like a megaphone, right? We tend to not really look at that until it proves itself to be. We can keep our mind open that if we saw some sudden breakdown here below the daily pivot, then maybe you look at that, right? But until then, I would just rather look at this as a 1-2 here, because again, 50+% pullback, and we're rallying broken out here, right? So for me, it's most important to look at what we're looking at right now, right? So, I mean, this is a pretty clean chart. It looks good here. By the way, if we were to rally here on the CME, right? Let's see here. Yeah, right about there. So, we would expect, without overextending, wave 3 to hit 36,400, wave 2 to hit 40,385. Okay? That's where we would expect it to hit. Overextension could have wave 3 closer to the 40,400 area, and wave 5 closer to this this area up here, right? Let me see here. Let me kind of pull down the volume here, right? Now, if we look at the volume off the all-time high down to low here, guys, this red line is what we call the point of control. Okay? The point of control on this rally or on this decline down is the area where the most transactions took place, the dollar level, right? So it's right there around, I can't even get it on there. I'm going to tell you why this is important if you don't know. It's right there around 19,000, okay? Now, this is important because the way these things work is if you are above it doesn't tell you that the market is bullish or bearish, right? All this tells you is this is the most important level for the market on the way down. This is the level where the most money exchanged hands, which means that if you are above it, it works as support. If you are below it, it works as resistance. Look at how it works as support here, right? It crashed down, worked as resistance. Boom, popped out, came back, worked as support, okay? This is important. But look at this. Look what happens here. Low volume node coming right up, right? Low volume, and then it pops out a little bit. Low volume nodes again, pops out a little bit. So as you rally up, there's less and less interest in the market on that move down, okay? Now, if you're watching that, let me kind of step back here. So what are we looking for? Well, okay, some things. First of all, you've got this descending resistance, which we broke through on large candle spread, large volume, right? You should have been long on that because of that, right? We rallied up to resistance, basically this pivot area, pulled back to the support, the POC here, the point of control on the downtrend, right? And now we're rallying, we're rocketing back up on the weekly here into the pivot right now. Okay? So when you're looking at this, what does this mean? Well, it means that this area right here, if we don't get rejected here, we should expect to pop up at least up into this next node here. Now, when we look at this, why are these brighter colors and these are muted colors here? Because the brighter colors are where 70% of the action has taken place. Do you guys see what we're talking about now? You've got a downtrend, right? Point of control, the level at which most of the dollars exchanged hand was right there around that 19,000 level. This area here from about 26,000 down to the swing low at around 15,000 here on the CME. This is where 70% of all dollars traded on this entire move down. This is where the market is most interested. This is where we are trying to break out of right now. Does this make sense, guys? Does this make sense? So when you're looking at this, if we don't get rejected right here, you should expect to pop on up, right? Your first area is that 29, 30,000 area right here. Your next pop up is, basically this 38, 40,000 area up here. Now, this one just so happens to align with your R1 pivot, right? The fifth wave from where we are is up here around the 43.85. Now, let's say we don't get an overextension. Let's say we go 1, 2, we go 3 up here to 36.5, basically, 4 back down to around 30. and 5 up here to 40,400, right? That gives us a wave 1 there, right? Now watch what happens here. We pull back 50% just above the weekly pivot. So again, same thing I've been telling you guys for months now. If we get this break up toward this area, we should just expect to pull back toward the pivot area. That becomes a 1, that becomes a 2, and we break out higher for a 3. Okay? I mean, this, at the end of the day, guys, I post shorter term charts, look at ideas, think about things. But at the end of the day, this continues to be what I've talked to you guys about, right? You guys have been around almost every time for months now. You know, this is exactly what we talk about. This has been the idea that, we were going to hit the pivot, pull back, and then break out, or we were going to, just overextend and really break on out through the pivot to hit the R1 first and then pull back. Those have always been the two kind of scenarios we've really been looking at, right? So that's what we're looking at here. So we got the breakout through the descending resistance on expanded volume, spike of volume as well there coming in, right? Spike of volume from where we were at. We had volume dropping off all the way down, and then boom, that candle was where we took the volume spike. Large candle spread. That tells us this is a significant area of resistance and likely indicates a reversal off that bottom, right? We look at the volume here, and we know that the number one level from, coming down from November of 21 till November of 22 was that 19,000 level. That is where we can see the market, where the market is giving us, has been giving us that's exactly where they put the most money. There's no guessing, guys. Listen, this is not guessing. This is not pontification. This is, listen, reality coming down here. That is the level where most of the dollars went, right? We also know this is the 70% area here, which means on the entire move over the year, only 30% of the dollars traded happened above that, what is that, that $26,000 area here. Okay. Now that could mean ease of movement up, other than these small little pockets here, right, where you expect to get some resistance. But within that, what you want to watch is these areas, because these low volume nodes, if they don't reject you immediately, usually they'll act like a magnet and pull you into the high volume node. Because at these low volume nodes, there's nobody really interested. There's no trading to really be done there, right? So if you're a bigger player wanting to get in or wanting to get out as price moves, those little areas are not the place you want to do it, right? You want to do it where there's liquidity, right? Where the market is interested. So that's what we're kind of looking for here. Again, if we can get a impulsive breakout above that pivot, we should rally up to the R1. At least, kind of this area here. We could go all the way up here to the 46, 47,000. Up in this supply block up here, right? We could and pull back. But as long as we get toward that R1 pivot area here, then a 50% pullback gets us to the pivot, and that's a solid wave too. Okay? Let me see here. What's going on, Brady, man? Hey, I appreciate that. And he says, so happy I've been listening to you recently and blocking out the bearish noise. I appreciate that, man. Again, I'm not here to say that I'm going to be right every time, but God dog it, there are certain things that you learn when you're trading that you pay attention to, right? And you see if they play out. I got people that come up, to my feed on Twitter. They go, oh, well, that didn't work out. I posed the question, will it continue? I didn't say it was going to, or that didn't work out. Well, I said we needed to see a breakout above the pivot. We didn't get that. So nothing did not work out, You guys, you have to be more clear out there. You guys got to pay attention, right? It's imperative, just in life, guys, to actually pay attention to what's going on. Social media gives people diarrhea of the mouth. I mean, and they don't even think twice about the words they say. I'm going to tell you guys, I'm old. If anybody's ever going to come work for me, if you guys ever find some reason to come work for me and you want to, I don't accept a bunch of the nonsense that people do today. I expect you to think before you speak. I expect you to pay attention, and I think a lot of that's missing, unfortunately, in the world today. And it's in droves out there on social media, right? Let me see here. Brady says, I felt like the market was apathetic to bad news. I love the word, man. I'll give you 5 points for that word, apathetic. And not reacting as strongly. I think you told us that means the bottom was near. Yeah. So usually, again, nothing is ever guaranteed, right? Nothing's 100%. But you want to watch on your charts, right? if you're getting to the top here and you're getting a lot of great news, but price isn't really pushing up any further, guess what? It's probably a topish area, right? If you're down at the bottom and you're getting all this bad news and price just doesn't really go down any lower and or continues to go up instead, it means the bottom's probably in. Why does it? Because at the bottom, guys, we've had, again, 3 different capitulations here, right? May, June, and November, right? And during, so people that were holding, right, that had a lot of supply, they ran out of it, right? Those that are holding, especially after this, what appears to be a terminal shakeout here, especially after that, there's not a lot of supply left to come in the market. And those who have it intend to hold it for a while. So price makes easy strides up, right? Yeah. So that's what we look for. Is generally one of those things that can kind of help you look and go, well, maybe there's a top or maybe there's a bottom going on there. Yeah. Social media is a cesspool. I agree. That's what Bamboo says right there. I am old. Yes. Let me see here. Jay can play. What's up, man? All this makes a ton of sense. Good. I'm glad, man. I'm glad. Ahmed says, what do you say there, Ahmed? If Bitcoin is going to make the third wave, Ethereum is extremely, extremely bullish. 2 extremely, huh? There's a possible 1-2-1-2 setup in Ethereum. Yeah. Ethereum definitely is looking pretty decent right now. By the way, guys, listen. The safest play, I'm going to tell you, in all of crypto, the safest play is always Bitcoin. Why? Because it is the king. It was the first one out. Network effects, blah, blah, blah. When people think crypto, it's what they think of first, right? Everything else is an alt, even Ethereum, okay? If the entire cryptocurrency segment were to go down, right? And let's keep stable coins out. Let's talk about things that actually, from a day-to-day basis, fluctuate, right? Significantly. Then, Bitcoin should be the last man standing. Okay. But what that also means is when there are rallies, the alts will outperform. Just like when there's declines, they're going to outperform to the downside, right? So just make sure you guys understand that. Again, part of trading is not only understanding the market you're in, but what you're trading, the time frames you're trading on, the exchange or the broker you're trading at. Risk management goes way beyond the individual trade you're taking, guys. That's just one small part of it. Okay? So make sure you guys understand that for sure. Let me see here. Let me kind of check what other charts I got here. Okay, so let's jump over here we can actually look at the Bitcoin chart, right? Again, same idea that I'm showing you here, right? You have the point of control here, right? A little bit higher. This again is spot. We made a lower low here, whereas the CME made a higher low, right? Let me see here. Did I get that right? Yeah, they made this this higher low off the low down here in November, right? Higher low coming off that. Whereas we made a lower low right here, right? So I mean, there are differences because again, CME's Bitcoin futures, Bitcoin, this is spot Bitcoin, right? But nonetheless, around the same area, point of control, Steven, the spot there. Look at that, right there to about 19,800 or so. That wick. Look at this weekly wick. If you did not buy this, you are not doing it correctly, right? This pin bar on the weekly at support, I mean, you don't have to look at anything else. You should have been long at the close of that week. You should have been long at the close of that week. Big, huge candle coming up, nice bullish engulfing. This is what we want to see. Again, Stoke RSI threatening to cross bearishly, right? Or bullishly up there and overbought. RSI still has a ton of room to go before it even hits overbought. So, same idea here, guys. Same thing going on. Again, you have your volume coming down here, right? This one, the 70% rallies up here to around 29.5, 29 or so. A little bit higher up. But nonetheless, after that, of course, we got this here, right? So as we look at this, look at that pivot right in the middle of this low volume node here. Again, if we can pop through that, minimally, we should get to that $29,000, $30,000 area. If we can pop above that and kind of get drawn up through this 33.7 kind of area here on the spot, we should find our way up to the R1 pivot up here at around $38,000, $40,000. Same thing happens here, guys. You get up there, you pull back, and this is a black retracement here. There we go. It's still a 50% pullback to that pivot. I'm telling you guys, If we can get impulsive breakout above this pivot, even though we're quite overbought on things, right? Now, daily still has some room on the RSI, but Stoke RSI is overbought now. And then, if you get 12 hours all the way down, they're all pretty much overbought. Stoke RSI. Looks like the 1 hour is just now kind of pulled back a little bit. 15-minute did pull back. But yeah, when you're getting up there, a lot of oversold there. So, it would suggest that you should see a rejection. But again, with this particular area we are at in terms of volume, right? Volume levels, right? We should, if we get a pop out, it should carry us. So that's kind of what we're looking at. Okay. All alts are kind of screaming the direction of the market. What do you mean? Amit? Maxis would celebrate me for that comment earlier, Bamboo. But yeah, so there we go, right? I mean, this is the picture chart. I mean, if you are honestly, guys, if you're bearish, I don't know. Doesn't seem like the best position to take. If you've been bearish since the bottom and you've refused to buy anything and you've tried to short all the way up, I mean, you've gone from 15,000 to 20, I don't know what we get here so far today. 26,553, right? Now, here's the thing. If we do get rejected the pivot, I'm looking for a pullback toward the daily pivot. Why? Guess what, guys? Look at where the 50% comes in, right around that daily pivot again, which, by the way, makes sense, right? Because you have this sideways here, rallied up through it, found support, came down, created sideways in the same area, right? Resistance right here. I mean, this makes sense right here, right? This makes sense as support, right? Pull down a little bit more there. That makes sense as support. So if we were to get rejected here, that's what I'd be looking at. And then I would look at this as 1, 2 and rallying up. But if we can clear this, if all of a sudden we get a pop up above this, again, I think we head up toward that 29, 30,000 area. And then, could potentially see it even rallying up higher there. Let me see here. I see people talking about the pivots here on the daily. Impulsive breakout, large candle spread, large spike of volume through the daily pivot, right? Rallying up through the R1 without even pulling back, right? Almost to the R2. This is extremely bullish. Most of the time, this indicates we're going to rally through the R5. R5 is up there around 33,000. So again, and by the way, 1, 2, wave 3 on spot here has a 35,319.5 target. So I could see that, right? I could see this, even if we do this straight up from here, right? But if we just pull back, let's say this is where it is and we get rejected, we come back down toward that daily pivot, right? Let's say we do that. Oh, that's terrible color. Sorry. I apologize, my friends. Let me put this on a better color here. So as you can see, if we get this pullback here for like a 1, 2 of 3, right? Well, all of a sudden, wave 5 is up here around 37,290. So wave 3 overextends toward 37,290 at least. Okay, which means wave 5 then gets closer toward that 41,000. Right? Does that make sense? So that's kind of what we're looking for. If we get the pullback toward the daily pivot, we should see that kind of rally up through there. So, but again, whether you're looking at pivots and the action through the pivots, whether it's the daily or the weekly, whether you're looking at Wyckoff, or whether you're looking at Elliott wave, or whatever you're looking at here, it's all kind of getting to that same way, especially once we get the impulsive breakout above the weekly pivot. That makes sense? All right. So that's kind of what I'm looking at there, right? Ahmet was clarifying his comment earlier. Says, I'll just put it up for you guys to see. Most of the alts have a 5-wave from the bottom and a 3-wave pullback. Is easy to estimate the coming wave. That's what they are screaming. Okay, so yes, you're saying further up. Yeah, I think it's setting up there on a lot of them for sure. But yeah, so this is kind of the way I'm looking at it right now, right? And so if we jump up here now and we talk about everybody's favorite, right? Everybody's favorite, the dollar. Well, the Dixie anyway, the dollar against the basket of currencies, right? I thought I had that up front there. Nope, I guess not. Okay. Let's see here. All right. So here we are bouncing around that support area, around that daily S1 pivot, and this this resistance here, right? Right here at this higher volume node. See, again, whether you're looking at it just on the rally up or you're looking at overall all this information here, this area that we've kind of got rejected at is the area which the market has traded the most. It is where they are interested, right? I don't want to draw the inverse head and shoulders on Bitcoin. I don't want to. But anyway, so this is what I was talking about earlier, right? If you are on top of a high volume node, it acts as support. Okay. If you are underneath a high volume node, it acts as resistance. Now, as you can see here, as we bring in more information, it changes, right? But basically, we hit this high volume node area. Actually, we hit the low volume node here. See here it is right there. Remember what I told you when we were looking at it weekly, right? If we pop up and get rejected at that low volume node, it should retest previous support, right? If it pops on down through it, then it looks for the high volume node, right? This is what I'm showing you. This is what's happened here. Twice we've hit this low volume node here. And the second time has been the rally back up to this area of resistance, right? Now, your 1 hour, you're kind of up here around overbought with the Stochastic RSI. RSI is still kind of neutral. 4 hours climbing. And so we had this rally up. And then we got this pullback. So we got this, we got this doji 4 hour candle here. I didn't say doji cat or doja cat, right? I don't know what it is. I'm trying to act cool here. I'm trying to act like I know what you guys listen to. I'm just kidding. All right, guys. All right. Sorry about that. Bad joke. I could see this potentially as an ABC, and then 5 up. So this becomes a flat, right? ABC. And so what that means is minimally, and see, I'm going to change these colors back now because we're on this lighter chart. Minimally, that gives us a target of a 102.635. If we assume maybe this is some sort of wave 4, right? Now, if this is a 1-2, well, obviously, we're going to go much lower than that, right? But you should be looking for at least a breakdown below there. So what are we looking for? We're looking for a breakdown below the swing low here, because if this is an A, a B, and a C is a flat, then this swing low is B at 103.085. And if we lose that, we should continue lower. Okay. How old do I think you are there, Michael Johnson? I don't know, buddy. I don't know. Hank's shouting out mid-80s. I won't go there. I know I'm almost 50, so there, right? Let me see here. So this is kind of where we're at here, right? So as we continue zooming out on the charts here, right? The 4 hour, again, is almost broken out into overbought, and RSI really isn't going anywhere. So again, if you're bullish, these are usually things that you don't want to see. You usually don't want to see these fast moves in Stochastic RSI, and price is just kind of there, right? RSI is not really moving because it's showing no real gain with it, right? Again, you had that big push down. Now, the daily has reset down and oversold Stochastic RSI, but RSI itself remains above oversold. So we could definitely be looking for further downside. If we're looking at the daily, what are we actually seeing, guys? We're seeing a drop. We had the big volume come in right here, hit the pivot back up to resistance, right? Next candle breaks through on not quite as high, a little bit off, but still second highest volume since back here on the February 14th, right? And it breaks on down. Now today, we rally back up and we're getting rejected. Again, guys, pay attention where we're getting rejected. Look at my line here. Look left. It's this right here, this support, this resistance, this support, this resistance, support, all the way through here, right? It's the high volume node. So wouldn't be surprised to see that down. So if we break down through here, generally what I'm thinking, breaking down through the pivot, I'm looking for a bounce off the S1. Because what does that do? Well, the same way we look at the move up, it gives us 1, 2 on the move down, right? So if we get down to this S1 pivot, then you see that the daily is right here between the 38.2 and the 50. Now, getting down here, this might actually, by the time the end of the month comes, if we get down toward this area, it might be April before we get this rally up fully back up to this area. So I could see the pivot maybe rallying a bit higher here into this high volume node around 103, 103.9. So I could see us be maybe wave 1 down, wave 2 up, and then down lower, right? You can also see the S1 pivot is right here at this higher volume node. But generally, that's what I'll look for. So we'll see how it plays out. Again, I have no reason right now to think that this wave 2 is really in any danger or anything right now of being lost. And so we'll look for it to continue down there, right? Let's see here. Michael Johnson, they're 35 years old, way past all these cool references, huh? Let me see here. My ticker symbol is going over my face. I don't know what that means, Hank. Because my ticker symbol is way up here, not way over, over off the chart over here. Here on Twitch, it doesn't show YouTube's chat as a feature been disabled. So I'm using a different stream service here because this one works really well with hosting people. And like I said, looking to do that. I wasn't aware it was even showing. Oh, I was showing just the whole thing on there. Yeah, it's not going to show it over there, I don't think. So, yeah. What, this right here? Yeah, this thing goes across my face here. Yeah, well, I can't, unfortunately, move my face where I want to be. I don't know. Can I do this? I guess it'll do that. I was just worried if I did that it would make the chart too small for you guys. Yeah. I got you. Okay. Appreciate it, guys. Appreciate all the help before I get out there and really embarrass myself with smart people, right? Anyway. So I mean, as far as the Dixie goes, guys, I don't see any reason to believe that we really should have a lot of issue about, really kind of rallying up there. I think we've got further to go overall here on the daily. We haven't hit that oversold yet. We're doing classic movements through pivots that we kind of look for. Importantly, we popped out above the pivot here, tried to make one more attempt and then fell back through. You can see that rally up with a large upper wick, and then the close back below the pivot was on the spike of volume here. Weekly RSI or Stochastic RSI is crossed bearishly, curled down. So again, ultimately for here, looking for the same idea, right? You get 5 waves down to the S1, rally back up, and then you come down. And so if we look at that 50% retracement is the weekly pivot. So again, the same thing that we're looking for on overall there on Bitcoin is the same thing we're seeing, just in the opposite, I believe, on the DXY, right? Let me see here. We are smart people, Mark says. Yeah, but you're not on the show. So I was talking about on the show. And I think Hank tried to take offense to that, but we won't let that happen, right? All right, guys. So anyway, so yeah, that's kind of where we're looking with this. So what does that mean for the price of tea in China, right? Let me see here. If we look at the E-minis, right? I mean, here we are, guys. Now, interestingly, remember, this is the red support line I've had for a while, support resistance, right? Found support here, came back, found support above, dipped below, doji on it, and rally back up off it on the daily, right? Daily Stochastic RSI is crossing bullishly, threatening to break out of oversold. You can also see this spike of volume down at the bottom here. It's capitulation volume down at the bottom, right? Basically, you see this area right here? See that area right there? This is demand. That's why you got this move down in a quick wick right back up. And now you're getting follow through higher. This was support here, right? So again, looking to break out higher here. My count appears to be a bit off though. So we'll go ahead and change that now. Was obviously a bit ago, right? We dropped down around that 85.4. So we need this really to kind of do its thing and rally up through there, right? Okay. All right, Hank. Well, you can find it annoying, but you'll continue to watch. So anyway, so looking at potentially a 1-2-1-2 here. Actually, if I'm looking at this, nope, I've got this all changed, right? I've got this as, I've changed this. Looking at potentially a running flat here is what I've got this into. I had it as a potentially 1-2-1-2, and then this looks like ABC 1, ABC 2, 3, and ABC 3. So it looks like an ending diagonal for wave C, which is what we most often get when we have these flat corrections. It catches a bid before it breaks down below, makes it a running flat. We have the breakout above. So now this would give us then a target here of, it's going to change this. All right, here we go. So that would now give us a target up here of 49.45 for wave 3. Oops. I got the 1 in there. 49.45. There we go. And then a minimum expected wave 5 up there around 52.05.50, right? So of course those are new all-time highs. So definitely wouldn't be surprised to kind of see that happening, right? Let me see here. Now the question is, as I've been talking to you guys, becomes, is this just wave 1 of wave 5, right? So is this 3 and 4 and then this wave 1 of 5, or is this wave 5? If this is this 4, 3, 4, 5 up here, I would expect to see a strong rally up here, blow off top time thing. And in that case, I would expect overextensions. So I wouldn't be surprised to see wave 3 rally up here to the 2618 at 56.27, giving us a wave 5 probably closer to 6,000 if we did that, right? So yeah. You guys are too much, man. But anyway, so yeah. So, again, guys, it's still the same thing we've talked about, right? Are we looking at a blow off top here? Or are we looking at a multi-year rally, right? So that's kind of what we're still asking ourselves with all this. But again, you can look for a breakout above this kind of resistance here. And let me see here. There we go. From the swing high here in August and then the swing high here in February, and getting that would be, hey, coming up. Now, this doesn't have to be what happens here. Remember, we've talked about there's multiple things that could be happening here. If this is a wave 4, this could just be A of a triangle. This could be ABC down as A, ABC up as B, C, D, E. And we could go sideways the entire year. How much would that be? How painful would that be for regular traders, right? For retail traders, right? Just to go sideways, no clear definitive movement, right? The other thought is this could be a flat playing out. And this is A. And then we'll have an ABC up for B, kind of like what we're looking here, right? And then we'll have 5 back down, maybe breaking down right below wave 4 here. And man, that would whoop people out, right? Let's say you break out in 3 waves right above the swing high, turn around, immediately come down in 5 waves right below wave 4. You catch the breakout traders, you catch the breakdown traders, right? And then you go up. So there's a lot of possibilities that could go into. Right now, we're going off the count as it is. If this changes up here, we're getting an ABC up toward the swing high here, well, then we start looking at maybe a flat or a triangle. Okay? But either way, any of all this says we should likely be looking to head up higher, especially once we break out above that wave B area, or if you want to look at the descending resistance here, that area there. Okay? if equities and Bitcoin make new all-time highs, what would that mean for all-time highs for blockchain stocks like Riot and Mara as well? Most likely, if Bitcoin's rallying, Mara, Riot, Coin, Hut, was it GG or whatever, GIGI, all those things should go up with it. I mean, they have the additional weight of being equities and not just pure Bitcoin. But if Bitcoin's rallying, that's how they make their money, right? You probably even seen NVIDIA will probably rally too. And of course, GBTC, right? So we've talked about GBTC here more than a few times, right? Well, look at that. It's right there. How kind. I don't know if this is the most recent chart that we had. I think it is. Yeah, it's black. Should be. All right. So there we go, right? So we're looking to rally up here. We got a wave 3 up here at around, projected to be around 20, what is that? I'll tell you guys in a minute here. No, I won't. I thought I was going to tell you. Up here around $24. And then wave 5 up here, right around that $30 area. And again, if we do that, right? If we can get 5 waves up like that, 50% pullback, get you right above the gap here. 61.8 is right around the pivot. Now, if I'm looking at this though, this is just the big one here, right? But if I'm looking at this, I could see another scenario where we've got maybe A, B, or I'm sorry, 1, 2, 3, 4, and we're working on 5 here, right? And so if we're working on 5, right, that would give us an expected target up here of around, 1486 or so, right to this resistance, right where we would expect, right? I mean, again, if you're pulling down that rally, right, look at that. We're kind of hitting that we're kind of hitting that point of control right now. So again, if you pop up in here and you aren't rejected immediately, so if you don't route this pivot and get rejected, you should expect rally on up toward that R1, right? And so if I look at this, I go, okay, well, if this is 1, 2, right? And then this would be 1, 2. So this would give us, this would give us 5. So this would be like 1, 2, 3 to 21, 6, whatever there. Which would then give us a pullback. Let's see here. Oh, I've got that going the wrong way. $16 there is where that is. That give us a pullback, maybe 14 and 2 quarters, or 14 and a quarter, or 1362 area, which would then give us a 5th wave push, potentially just above it, around 1818, right here at this resistance, right? And so if we look at that and go, okay, well, that's where that is. Basically we're getting rejected around the pivot area. We pull back 50 to 61.8 right here at the higher volume node. So I could see the possibility, maybe we get like a 1, 2, 3, 4, and then 5 and come back. But again, if we're looking at this, I think there's also, the case to me, maybe what I have here, which is 1, 2, and then you get 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, right? So now you got 1, 2, or 5 up here, sorry. So you get 1, 2, like I have it counted there, and then we're just kind of doing this move up. So I think this bigger move is potentially more likely to count still on that. Let's see here. Let me kind of catch. Yeah, not using the Restream bot because I'm not using Restream. I'm using StreamYard, guys. Okay. Which is what I've been saying here. Let's see here. So yeah, so I mean, again, we're looking, decently overall with GBTC, right? Remember, it was back here in November at these lows here when everybody was screaming it was going to collapse, everything's going to go down. I said, no. I said, what's probably going to happen is going to rally up from here. They were way too bearish down here, right? The end of the world was coming, basically, is what they were saying in terms of GBTC. And that's the kind of sentiment that you look for, right? And we head on up there. Is that possible bearish divergence on the daily? Let me zoom out here to the daily, or zoom into the daily. You mean from this swing high to this current swing high here? Let me see. Today reached a high of 1360. Previously, it was 1354. For now, yes. But the day isn't done yet, right? And there's no follow through lower. So here's the thing you guys want to remember. It's a good question. But what you guys need to remember, because most people get divergences wrong because they rush, right? So if you're looking at the daily, the first thing is the daily has to close. Anything can happen until the daily closes, right? So this could continue rallying up today, pulling RSI above it and close above it, right? So then it wouldn't be a bearish divergence here, right? Because you'd have higher highs on price, you'd have higher highs here on the oscillator. The second thing that needs to happen is you need a definitive movement in the other direction. Because you could close up here, right? And you'd be down a little bit, right? I mean, it looks like bearish divergence. But instead of continuing lower, you'd have maybe the next day pull back just slightly. And then the third day, you could break out even higher, right? And again, continue this rallying up. All right? So you're going to have to be careful with that, guys, when you're doing that, okay? I heard somebody yell about an inverse head and shoulders here. Oh, I hate y'all. You guys know how I feel about head and shoulders, right? This would be a double-headed head and shoulders here, basically. Which is, an irregular head and shoulders. So if this is going to be, we would need to see an impulsive breakout above here that stays above. It can't break out and break back down into it. If it does that, it invalidates the pattern. If this is an inverse head and shoulders, then what you expect to see is an impulsive breakout, large candle breaking out through this. Now it can come back and retest the neckline. That's fine. But if it continues back down into it, then it invalidates it. Okay. So, yeah. You think the weekly shows it better? I don't know. It shows it okay there on the daily. I don't know that I would pull it from here if this is what you mean. Right? I mean, it's not going to be, I wouldn't look at it this way. Does that make sense? I wouldn't look at it that way. No. It would have to be from this one. But even with this right here, again, the previous week you broke out, pulled back in all the way down, right? And then this week you break back out again. The fact that you broke out and pulled back in invalidates it as that pattern. So you don't want your neckline there. If you're going to think this is an inverse head and shoulders, then you definitely want your neckline back down here where you're looking for that breakout still to kind of happen, right? Does that make sense? Yeah, I mean, this is where you'd want to look at it. Again, I'm not a big fan of that because it's too easy for especially new traders to get to read it wrong, right? That's what I'm trying to say. So yeah, but we'll see. Again, we can say, I mean, without even having to say inverse head and shoulders, we can say, okay, well, there is a resistance here, right? We can say that. We don't even have to talk about inverse head and shoulders, with an irregular inverse head and shoulders got a double head here, right? We don't have to say that. Again, we can just say, listen, we're looking for a nice breakout above this resistance here. Yeah. So, but yeah, that's why I'd rather look at it that way, if you have to, right? But still, yeah, again, looking for the breakout here. I mean, same thing still holds, rejection at the pivot or breakout impulsively above the pivot, rally up into that R1 pivot area, and then pull back to the pivot. Same thing we're looking across. You notice all this is showing up everywhere, guys, right? Is the best practice to wait on both a confirmation of divergence and the needed movement in the correct direction before making the trade. I mean, if you want to limit the amount of times you'll probably be wrong, yeah. But again, it doesn't guarantee that it's even going to play out as you expect, John D. So, Johnny, yeah, it was asking that question there. Is it best to wait? Is it best practice to wait on both a confirmation of divergence and the needed movement? Because the needed movement is the confirmation, right? You have to have that follow through to the other direction. You want to see you want to see this elbow, this point, right? And price moving, in that other direction. Because again, otherwise you could just get a little pullback, or maybe not even a pullback, just continue up, a little pullback first and then continue higher. And it doesn't, it invalidates the idea that was a divergence there. Yeah. They're not as simple as people tend to think if you do them correctly. People tend to try and make them really, really simple, in which case they lose a lot of times that they shouldn't have to. It goes back to my whole saying, which is, again, that whole idea of that you should be looking to, what do I want to say here? That you're looking for a higher confidence trade. You're not entering a trade just because there's a chance. I'm telling you right now, guys, I don't care how new you are or how long you've been around or what way you trade, any way you trade. If you can internalize the idea that you should be looking for a higher confidence trade and not a trade just because there's a chance that it may work out, you're going to see your general success and your general capital account increase. Do better than what it's been, because you're filtering out a lot of the noise that you've been jumping on. And most of that noise is done because of emotions, because you're bored, because you are impatient, right? Because you fear that you're going to miss out, right? So, yeah. Let me see here. So I'm saying there's a chance. You know it. Fibbo's a mess. Don't you have a job? Just kidding. Okay. So that's what we're kind of looking at there. Let's see what other charts can I look at here real quick, guys. Let me look at Bitcoin dominance. I've got that chart here somewhere. Let me see. Oh, dominance. I wanted to talk about that. Oh, well, we can look right here, guys. Right now, the market is placing in a probability of a 26.9 chance of staying flat. Okay. On what's it called? The 22nd. So 8 days from now. So we went from last week, Tuesday, at basically an 80% chance of a 50 basis point rate hike to a week later, no chance of a 50% rate hike, 73% chance of a 25 point rate hike, and a 30 or almost a 27% chance right now, as it stands, of a flat Fed. And I expect we'll see this continuing to change as it goes on, right? Because if we look today, right? Excuse me. Let me see here. Today's CPI came out. I meant to talk about this a little bit earlier, but we'll go ahead and talk about it right now before we get on the next chart. Let me see here. Oh, today I need to this back a little bit. I gotta look at my my calendar here. Let me see here. So we expected 6%. We got 6%, which is a slowdown from last month's 6.4%. Okay. The month over month was 0.5% last time. We expected 0.4% this time. We got 0.4% this time. Core was at 302.7. We got it in at 304.07 this time. Now, consumer price index, if you take out food and energy month over month, was expected to be 0.4, which was what it was last time, and we got 0.5. So a little bit hotter in that. And then the year over year, 5.6 last time. We expected 5.5. We got 5.5 this time, right? Excuse me. So, again, the consumer, the CPI about where we expected, right? Now, Hank believes that because the Fed is backstopping the bank deposits, that they can go on. Now, the thinking with that, unfortunately, is that, okay, we can go on and continue to break the market because we're going to backstop it, right? But the Fed doesn't want to do that, right? The Fed doesn't want the market just going ape crap crazy all of a sudden, right? So here's the thing. If the Fed thinks, okay, we can continue raising the rate because we've backstopped that, well, the problem is continuing to raise the rate is going to still have, if it was, I guess, go back to work, raising the rate is still going to be hurting banks, right? Because the banks are still dealing with it now. So here's the thing: the banks are still dealing with the interest rates, right? That's the big issue, right? They've got all these high interest rate, right, coming at them. So if the Fed continues to hike those rates, they continue to be they continue to eat away at them, right? And so the Fed says, okay, so we're going to open up this this loan with you and everything, and we're going to pay market rate for them, right? Well, where's the Fed going to get the money for the market rate of that? They have to print more money. They can't continue to take money out of the system and then say, oh, here, we're going to put money back in the system. You see? This is why I'm saying they've effectively pivoted. Because even though there isn't a need for it at the moment, if they continue doing what they're doing, then they are going to expect that they're going to have to take those in, right? And they're going to have to put cash out there to the banks, right? And so what happens? The bank has more cash. The bank's not going to sit on it, right? Banks have mandates about what they can sit on and what they can't, stuff like that. Right? Whole bunch of stuff when it comes to banks. But effectively, if the Fed continues to strongly hike rates, then they're going to have to do these loans and whatever to the banks, right? And if we look right now, the Fed, for what it's worth, is at a loss right now, right? Because of, again, the interest rate, right, on those bonds, on those treasuries, right? So I don't know. I look at this and I say, okay, what's going to happen, in 8 days? I still think we get minimum 0.25, right? But I think there's a good case being made for being flat this time. Now, does that mean they have to stay flat through the rest of the year? No, it doesn't mean it. But if they don't see that what they've said there is helping to stabilize the banking market, they're not gonna go raise rates. It doesn't make any sense. If they can't stabilize the banks right now, then raising those interest rates is just going to make things worse, right? Pivoting may totally destroy their believability, as you said there. But they've, we say that, but guess what, guys? Everybody acts like all of a sudden, like the Fed isn't doing so. The Fed was wrong on waiting so long to hike interest rates to begin with, right? Remember what they said? Oh, no QE until, later toward the end of the year, the next year, right? Well, 2022. And then maybe we'll start raising interest rates in 2023. Remember, that was the narrative all around April, May of 21. And that's when I told you guys, no, they're going to have QE by November, and they're going to start raising interest rates Q1 of the first of the next year of 2022. And that's exactly what they did. And we've been doing that, the opposite of what they said they've been doing. I've been doing it publicly out here since 2018, right? Every single time. I don't know why everybody says, oh, the Fed's going to destroy their credibility. They never follow through with what they're doing anyway. But I'm going to tell you right now, at the end of the day, do you guys think that the Fed cares more about interest rates or they care more about global finance? What do you guys think? Because I'm going to tell you the answer. The answer is that they care more about keeping the wheels greased, guys. The USD is the world's reserve currency. If they screw it up with that and they tighten it so much, they drain up, so much of it, that it causes issues with everybody else. Well, that just causes issues with us too. The whole global system collapses. If it freezes, it's like your engine. If you don't put oil in it, it's going to seize up. Now, shut up if you've got an electric vehicle. Talking about combustion engines, right? If you don't put oil in it, your engine's going to seize up and it's not going anywhere, right? It's the same idea with the dollar, right? So again, I don't think the Fed has a lot of incentive to keep dragging these things out to crazy levels after what just happened. I think they're really concerned about it. I think, and rightfully so. Excuse me. They should have never hiked this much or this fast. Oh, I agree. Yeah. But they should have started hiking sooner if they were going to hike, right? Again, I'm not telling you what they should do or what they shouldn't do. All I said was, listen, this is what they said at the time, and this is what I said at the time. And what I said was actually what happened, right? You guys have been following me long enough. You heard it here. We're not talking about what's right or wrong. We're talking about what are they going to actually do. I think too many people get caught up in the whole, especially when they're thinking about macro, right? They're like, oh, well, the Fed needs to do this. They should do it. It doesn't matter. All that matters is what they actually do. That's all that matters. At the end of the day, that's all that matters. And so people get it wrong, right? A lot of macro guys so bearish. Oh, they're going to 6% and they're going to hit us hard next time. They're going to keep hitting us hard. And man, we're they're going to crash the economy and all this. The charts are saying something different, right? The charts have been saying something different. It doesn't mean we knew what was going to happen. We didn't know it was going to be a bank run. But we knew something was going to happen to give the Fed a reason to change what they were doing, right? Potentially. So now we see how it plays out. I think a lot of it's going to have to do with how the banking sector does over the next week or so. If there's still cracks, if they're still concerned about it, I don't think there's any way they raise even 25 basis points. Now, are they going to go negative? I don't know. I know there's some economic groups out there that are saying they'll probably go negative. I think right now that may be a little stretching it. I think there's a good, like I said, a good reason for flat. Yeah. So we'll see, right? You think it's the fastest you've seen the CME tracker move? Yeah, I know, right? It's been crazy. Hank says they have a hammer. Talk about the Fed. Yeah. I've talked about that time and time again, right? There is no finessing. The Fed is reactive, never proactive, and there is no finessing because they tend to wait so long to react, and then they think they have to act hard and fast, whether it's dropping or rallying, right? Whether it's dropping interest rates or rising or raising them, right? Yeah. So effectively, like Hank says, they're a hammer. Yeah. Let me see here. But yeah, so that's kind of my thoughts on that. Speaking of banks, though, guys, I was talking about a few banks here, right? Where are my banks? FRC. Check this out, guys. Look at that. So this is the monthly, just to give you an idea, right? We dip below. If this thing closes out like it looks like it's going to for the month, that's a heck of a bullish SFP, isn't it? From back over here in October of 11. Man, right? So, we'll see what happens here. But this is the monthly. So, we've still got 16, 17 days, whatever left in it. Weekly, again, look at that. Same thing here, right? Again, still oversold on all this, right? Daily, look at that. That was yesterday. Drop down, rally back up, right? So, I mean, again, huge move up right now. Let's see here. Off the low, currently we're sitting about 145, 150% rally. We were as high as about 191 earlier today, right? If we look at WAL now, right? Again, monthly candle, right? Or weekly is right here. I'm sorry, this is the weekly at the moment. Now this one, of course, did not break down lower, right? But it did find support in the where you would expect it to find support, right? Again, if we take our handy dandy little volume thing here, right? Boom. I mean, right there, right? This is where the market since 06, guys, since 06, this dollar level right here at about $6 is where the market has had most of it, right? Hey, Fibbo, take care, man. But look at that. Again, you're finding support right around that, right into this area here, right? We have rallied all the way back up, guys. And so this is the monthly. Let's kind of zoom this out to the daily here, right? Look at this daily candle, guys. Look at that. If you were lucky enough to buy anywhere near the lows, guys, coming off the low here, I mean, you're currently sitting up about 300 and almost 340%. Earlier today, you would have been up 435% in like a day and some change, guys. A day and some change, right? So that's good. That you want to see them getting short up, right? This is Western Alliance, of course, FRC over here, First Republic, FRB. So you're kind of seeing this thing happening, right? Let me see here. Do I have it? Stock sectors. What we got here? A lot of green in here. TRV is down a little bit. What is this? FITB is down even more. Oh, there's a dark red one right there. MTB, PSA, AON, PNC is still down a little bit today. So you've got some red in here, but you got a lot of green. So you got a lot of rallying back up. Now we need to see follow through on that, right? Claudio, what's up, man? So yeah, that's where we're going. So who's the real winner out of all this, guys? I think it's your big banks, right? So HSB, Hank might be able to correct me if I'm wrong on this. I think it was HSB over there in the UK took over SVB UK for like what was it, a pound, 1.16 pounds, something like that. Yesterday, I believe it was. SVB, I don't think has a buyer yet. Now, so here's the problem with the Fed, right? You start looking and you go, okay, we're going to backstop all this. But I don't believe that they found a buyer yet. Last time I saw it, they hadn't found a buyer for SVB yet. Now, for those of you who worry about the FDIC, guys, remember, the FDIC says, sure, right? They say, sure, we're going to backstop, or, we're going to protect, in the insured accounts up to 250,000, right? If you're single, 500,000 if you're married, right? But people, and then all of a sudden all over Twitter, you start seeing everybody going, oh, well, they don't have enough to secure all the deposits, right? But that isn't how that works, right? They take over the custody of the bank, right? They get rid of management. They start selling it in parts and or in full. If they don't make enough from all that, then they'll dip into what they have set aside. But most often, that's all it needs, right? And again, I think I mentioned this on Friday, bank bail-ins are kind of, I think, the new way going forward, right? You would have paid £2, Bamboo. But yeah, again, if you're going in with it, right? Excuse me. If you're, how do I say this? So bail-ins, right? Bail-ins basically convert creditors into equity partners, basically, in order to protect depositors. And in doing so, creditors often take a hit. They take a, they get a haircut, right? But the bail-in then keeps you from socializing, basically, deposit loss or deposit guarantees, right? So we'll see here. There will probably be a court case. Let me see, Hank's saying here. There will probably be a court case whether or not the Fed should compensate SVB for the difference in sale price that they got below par. I don't know if there's going to be a sale price or a court case in there. I haven't actually looked deeply into the laws there, but I'm pretty sure they've probably got something already written in that says this is the way it is. So I don't know that I'm really all too worried about that potentially happening. But nonetheless, today, yesterday was a lot of red here in the finance sector, right? Today we got a lot more green. You can see the big winners again from these things become the big banks, guys. Like you said, HSBC there, JP Morgan, probably Goldman Sachs, Bank of America, Wells Fargo, maybe. And you look at the really large banks that are going to they're going to consolidate this stuff, right? Why would banks do that? I heard somebody saying, why would banks go after these assets? Well, because banks spend a lot of money trying to get new customers, a lot of money. And, being able to, get these assets and or customers, right? If they buy the bank, right? ends up usually being a much more cost-effective way for them to grow. So yeah. I think, if we're looking at it, I mean, that's why they would do it. Don't think they wouldn't. Don't think there is any. I had somebody say, well, half of SBV's stuff, I believe, was bought up on Saturday, and it seemed like to them it seemed weird. That was pretty quick. They bought it. Well, no, I mean, we're talking about bonds and stuff, right? And you're talking about all these other things, and it's good collateral, right? It's good assets. I say collateral. It's good assets. It's gonna find easy buyers, right? So that we got that there, right? Mark is saying, what are you saying here, Mark? I think the cost to acquire a new credit card company is like $1,000 to $2,000. Yeah, pretty expensive on that too, right? And plus, if you're a bank, right, especially if you're a bigger bank, you get in your customers, and all of a sudden you can start selling them to everything else, right? So yeah, it's definitely a better way of doing it. So yeah, and this is the way things work, guys. When we have these busts, and when we have things where sectors are down, whatever, I mean, the ones that are better positioned are able to buy up the assets, for a song sometimes, right? Yeah. So if you're a bank, you bring in a customer, all of a sudden you can start pushing mortgages, car loans, credit cards, credit lines, refinancings, whatever you got, right? Your wealth management services, all that stuff. So yeah, don't think for a second there aren't banks sitting out there going, this would be good. Jump on that, right? So anyway, yeah. So that's what we're kind of looking at there. So again, I think the Fed's got if the banking sector continues to stabilize, I could maybe see a 25 basis point rate hike in March. I could also still see it being flat. You don't want to freak everybody out all of a sudden again. Remember, the reason this whole nonsense started was because Thiel was like, "Oh God, get your money out!" Right? I mean, social media and online banking. I mean, those things together. This is something that the current understandings of bank runs never took into consideration, right? Before, if you had a bank run, you had to go run to the bank, right? You had to actually go to the bank physically and sit in line and demand your deposits, right? Now you can just sit at home and do it. And social media, things spread like wildfire, right? So you got a catalyst, Peter Thiel, right? Right, wrong, or otherwise, catalyst. Everybody listening, he's got a big social media base, right? They're listening. All of a sudden, they get worried. They run for, to move money. You don't have to go in person. You can just do it online. So I think, I don't even think what's going on with what the Fed has done to backstop this is the full thing. I think that's only like a small part of it. I think the bigger thing is, how do you now that you know this is a thing, now that you've been slapped in the face and said this is something that actually happens, what do you do? How do you change banking now? How do you change your preparedness, your preparedness for bank runs now? If you're the federal government, if you're banks, I think that's the focus now. Not even on what just happened with the Fed to here. I think it goes out further. How do we move forward from this now? I think that's the real thing that we watch on this here. Yeah. Michael Johnson said, to be fair, the lines outside of SVB branches were long lasting. Yeah, but had we not had online banking, they would have been a lot longer. Yeah, you're still going to have people go in. Sure. But the bulk of it was done via online banking, as we're starting to see this stuff come out, right? And it's quick and it's fast, right? Just do it online right away. Boom, boom. You don't have to waste time driving to the bank, standing in line, requesting, and going through the process. Just, load up your computer and your phone and jump in there and do that, right? Yeah. So, I mean, I think this is the real thing, guys. This is the kind of the real concern that we see coming on, right? So, yeah, it's kind of crazy. Hank says, that's the problem with modern bank runs. You can't stop them. I agree. It's really difficult. So you have to go, okay, well, so what do you do? If you're the federal banks, what do you do? Well, you have to get them to believe you. You have to get people to feel like they're safe. As long as they feel like their stuff is safe, there's no reason to go in and get it. So that's what the Fed's trying to do with this backstop of deposits. They say, listen, we're underwriting the banks, guys. You ain't got nothing to worry about. But the banks still got things to worry about, right? Banks still got to figure out how is it going to deal with it. And again, if you were to see contagion, if you were start to see spillover with the banking sector right now, the only way the Fed gets out of it with what they've done now is they print new dollars. More liquidity coming into the system. And that's where you go, right? Well, I just saw a whole bunch of red pop up on there. What is that? Pharmaceuticals? Health? Yeah, J&J, Lilly. Amgen. Andrew says, what are you saying there, Andrew? You're saying perfect setup of the Great Reset? Could be. But see, again, and here's the other thing about that, guys. I'm a firm believer that we're probably going to have some sort of thing happen, right? The end of the credit thing, right? But, we can say this, but what are we going to do? We're going to keep saying it for the next 10 years until it finally happens? Or do we recognize that maybe we have one final party, one final hurrah, right? So what happened in 2020 is like this warning, and then we kind of goof off and we ignore the warning now that we're moving away from it, right? Recency bias says, oh, that was a while ago, right? Price is going up now. We're going to party. And we go up and up and up, and then things really break, right? And you look back and the charts say, listen, I warned you. You didn't pay attention. You continue to play hardball all the way up. Does that make sense? Hank says, at some point, the principle of fractional reserves needs to be integrated into the terms and conditions of your relationship with the bank. Man, I don't see that ever happening. I mean, look, people don't even know right now. You go sign up for a bank account and you put money in the bank, that paperwork they give you, nobody reads that. Read it. It tells you that the money no longer belongs to you. They say, thank you for your money. We love it. Here's an IOU. People don't realize. People are like, oh, my money out of the bank. It ain't your money at the bank. It's the bank's money. You want to get the money that they owe you via the IOU, right? But people don't even pay attention to that. That's basic. When you're in law school and you're looking at commercial law, that's one of the first things you're taught. First month usually, right? So yeah. Crazy times, crazy things happen, right? We'll see what happens. I'm open to the idea. Again, as I've said, guys, even leaning toward the idea of new all-time highs. I don't know if that means basically a melt up to a blow off top this year, or if that means some kind of extended multi-year rally. I think we kind of work at that as it works out. But I think especially with what just happened, and the Franks and then the Fed step back and go, whoa, okay, maybe we did too much too quick, because there's cracks now. And the banks, at the end of the day, the banking is the most important sector, right? How else does the Fed get money out to you? The banks, right? The Fed doesn't give you money directly. It can't by law. Congress would actually have to enact a law that says the FTC the Fed could give you money directly. The Fed has to go through a proxy, right? The proxy is the bank. So the Fed gives the banks money for their reserves. Reserves are up. Banks can give you loans, right? But then the banks are also then toured with, well, how does the economy look? If it doesn't look so good, well, we're not going to give such great loans, right? Or so many loans. But then they've got the bank rules that say, listen, they can only have so much on deposit, so much doing this and that, right? So they got to find somewhere to put the money. Reverse repo? Well, again, that's more liquidity coming into the market, right? Reverse repo is usually overnight, but you give the bank your pristine collateral, your MSBs, your treasuries, the bank to the Fed, and the Fed gives you cash, right? If you're a money market or if you're a bank, right? They give you cash, injecting liquidity into the system. So yeah. Hank is saying, I got to get out of here, guys. Hank is saying you need a few days for every withdrawal over 10,000 unless you arrange it in advance. Oh man, that would suck. Especially with today's people want everything done, today, right? Okay, he says, or you need a certain type of account. Errol Quinn over here saying, yeah, that's my belief, Chris. One more high than a crisis worse than 1929. So, and the way I look at that is, that would be the comparable last time. You know, if we're looking at grand super cycles, Hank doesn't believe in that. It's okay. But if we were to get it, you know, the expectation, that was a 3-year sharp drop, right? So the expectation would be this way would be, you know, if we look at Elliott Wave's theory of alternation, we should expect more sideways overall, right? So potentially a longer correction going out through there. Remember, it took almost 25 years, almost a quarter of a century to reach a new all-time high. It was mid-50s, above, you know, 1929, right before the Great Depression. So yeah. Have I taken a look at oil today? No, I got to go, but I'm going to go ahead and jump on oil real quick since you asked about it. Let me see here. Oil. Try this again. There we go. All right. So yeah, so we've got all this sideways right here. I was looking at the possibility maybe this was a low here. Not so sure right now. Here's that rally off the top, right? Volume wise. You can see we're below that high volume node right there, right? If we take it, I don't know. We can take it off from this low right here. Well, heck, let's just take off this one. Look at that. Same place, right? If we start back down here, 2020 there, it's just a little bit lower. So we're right around this. We got a lot of pressure on the top side. So if I'm looking at that, I want to see what happens in this area here, right? So yeah, I'm watching this right now. It looks like we want to get a breakdown here. If we lose support at 71.59 here, you know, again, here on the daily anyway, got kind of these targets here. Locally, basically the S2 and the S3 daily pivots, those are the EQs of these green ranges, these green demand structure areas, right? But I mean, ultimately, we're on the weekly here. You know, if we're breaking down through this area, I mean, you know, the next one logically is going to be this S1 pivot. If we do that, %50 retracement right up to the pivot. So we'll have to see how this plays out, right? I could potentially see this. I don't know. You know, again, this looks like a 1-2 or at least an AB, right? There's a flat correction here. Right here, right? But this isn't like an AB and then down here as a flat itself because we don't, you know, we're barely above 78.6. So maybe like a 1-2, or right now I've got that as an AB, right? And then this becomes interesting here. I mean, you could look at this as a leading diagonal coming off here, which would get really interesting. But again, it just kind of matters what happens. If we can get a breakout above the swing high here, you know, around that 82.66 level, around there, I think we got a good chance to rally up to the pivot on the weekly here, 93.65 or so, 6.8, 7. Impulsive breakout above there, of course, R1 pivot. Same thing we've been talking about, guys. But if we do get a breakdown here, I mean, you can look for support at these EQ areas, which again on the daily are the S2 and S3 pivots. But again, if we're getting down there, it seems most likely we'll continue down toward the S1 pivot here on the weekly. Yeah. So we're gonna. I want to see how this corrects. How this resolves in this area here. So yeah, that's what I want to see. Anyway, so there you go, man. Oil kind of doing its thing here, and we're just kind of waiting to see what are we going to get with this. Do we get a sudden reversal and rally back out, strong reversal and rally, or do we actually get a breakdown below the swing low here? It gives us a couple of targets, right around 67.90 or so and 64.10. Or does it continue all the way down here to around, just around $57? Those are the targets I'd watch if we're breaking down. If we can break out above that swing high, though, the 82.66 area, we should at least be looking to get up here probably around, $93 or so. Impulsive breakout above the pivot then should give us this potential rally up here to around 117. I think it's a good chance. All right. All right, guys. Well, I think that'll do it. As always, remember, the only thing you control in the market is how much you lose. So please keep working on the risk management. If you'd like to join us, again, our mentor program, it's a year long. It'll get you in the right frame of mind with trading. Trading's not something you learn in 5 days, guys. A lot of stuff you have to deal with are the things that are losing you money. You can learn how to trade a certain way in a couple of days. It's going to take a lot of practice before you get any consistency in it. And then even with that, you still have to worry about your emotions and all that, which is a lot of stuff that we deal with. So you can do that, or you can join us for tier 3 there, $49 for 1 month. Jump on it, because normally it's $200 a month. I'd love to see you there. All right. Again, link there at the beginning of the video. I hope you guys have an amazing day. Trade safe. Definitely, beyond the fact that all you control is how much you lose, don't forget that even beyond that, you've got to still find trades that make sense, right? You got to find trades that are higher confidence trades, not just because there's a chance. At least if you want to try and make sure that you have some sort of chance to win in this game, right? All right. If you guys are in Discord, I'll see you guys here in a bit. Otherwise, I'll be back on Friday, 11 a.m. Central Standard Time. Hope to have you guys joining in. Take care.